Hello, ladies and gentlemen. Thank you for joining us. This show is sponsored by Mortgage Solutions, the reverse mortgage specialist. We're going to discuss reverse mortgages on this show, and I would like to introduce two guests who have extensive knowledge as it pertains to reverse mortgages, Mr. Ernie Castro and Mr. Frank Howard. Welcome, gentlemen, and thank you for joining our show.
Thanks for having us, Don.
Thank you, Don.
First, we're going to define what a reverse mortgage is. I'm going to turn that question over to you, Ernie.
Okay, well, a reverse mortgage is a mortgage product that's specifically designed for homeowners 62 years of age and above. And the intent is to allow these senior homeowners to stay in their home for as long as they possibly can. And the reverse mortgage allows a homeowner to tap into the equity of their home and to use those funds for whatever purpose they desire. Now, the term reverse comes from, on a standard mortgage, if you're paying principal and interest, when you make a payment, the principal balance on your mortgage goes down, but you're making a payment. With a reverse mortgage, the principal balance on your loan is going up, but you do not make a payment. So it is the reverse of a standard mortgage.
Okay, there are a lot of misconceptions about reverse mortgage. I hear a lot of things. So we're going to get into our Mythbusters segment quickly here and go over some myths that we've all heard about reverse mortgages. And you had mentioned something earlier before the show started about the four nevers. Can you elaborate on that for us?
Well, I sure will, Don. There's a couple of the major myths out there. One, the bank, if you take out a reverse mortgage, the bank owns your home. And number two, you have to have your home completely paid off in full to get a reverse mortgage. So a good way to explain it came up with the four nevers. These are true of all reverse mortgage loans. Number one, you never give up title to your home. Number two, you never have to make a mortgage payment. Number three, you'll never be forced to move from your home. Some folks feel that if your loan balance is going up and it reaches the appraised value of your home, somebody's going to come knock on their door and say it's time for you to go. That will never happen. And the fourth never is you will never owe more to the bank than what your home brings its sale when you're no longer living in the home.
Okay, so if you're living in the property and all the equity is gone, at that point, who's picking up the tab for that? As it continues, the loan balance keeps going up. I'll turn that question over to you, Mr. Howard.
Well, at closing, the homeowner signs non-recourse paper, and what that means is there's no personal liability on the loan whatsoever. So even if the equity in the property diminishes to zero, they don't have to leave. They stay in the property for as long as they live. When they pass away, if the house is underwater, the FHA just takes the property and sells it.
When you say underwater, that means if they owe more on it than...
If they owe more on it than it's worth. But the lender cannot go after the other assets of the estate.
Okay, so the heirs are not going to be subject to anything?
Not at all.
Well, this clarifies a lot of things, because these are things that I had questions about myself, and I'm sure a lot of people have had questions about these, certainly. When you see these Robert Wagner commercials, you don't get into any of the details like we're doing here. So. Well,
that's a very important safeguard for families who are worried about what happens after mom and dad have passed away. The heirs, the estate, they do not have to worry about anyone coming after the estate or the heirs for any monies to be owed. It's a wonderful safeguard for families.
The only two requirements is that they live in the house as their primary residence, and that when they either pass away or they decide to move, they have to sell the house. Those are the only two requirements. There's no credit qualifying.
No credit qualifying.
A lot of people think we have done numerous foreclosure rescues, and a lot of seniors think, you know what, I can't refinance my house, my credit's bad, and even if I could refinance it, I don't have the wherewithal, I wouldn't qualify to pay back the loan. There's no qualifying. There's no income qualifying.
There's no income qualifying, and so, okay, but what about the real estate taxes and the homeowner's insurance?
They are responsible to keep the real estate taxes and homeowner's insurance current However, in probably, Ernie, what would you say, 75, 80% of our cases, the homeowner is exempt from real estate taxes.
Right, and that's a good point. I'm surprised by the number of senior homeowners out there that are not aware of the fact that most of the local counties in this area, especially in Fairfax County for sure, senior homeowners are eligible for real estate tax relief up to 100% of the tax. And I've talked with many clients, and when I brought that subject up, several of them were unaware that that program even existed, and I was able to get them to apply, and they didn't have to pay real estate taxes.
Okay, so there must be some kind of stipulation on that. What age does that start?
Well, it's age 65 and above. If you're 65 or above, the stipulations are in Fairfax County for 100% tax relief. The combined household income must be $52,000 or less, and your total assets, not including your primary residence, have to be $350,000 or less. So, and I have this, we're working on a case now where the borrower does not make $52,000, but her son lives in the home, and his income had put her over the threshold. So, keep in mind it's the total combined household income. So if you have other folks, other family members,
all the occupants.
Yes, that's correct.
Okay, so to clarify that a little bit, okay, her son lives in the house, but was he on the deed? Or?
In this case, no, he was not on the deed, even though he's over 62. But for Fairfax County purposes, they would consider his income along with hers
okay,
to
so
make that calculation.
Any of the occupants, even though he's not on the deed, he could be a tenant or whatever. For her.
And also, let me just finish on the qualification. At 62,000, between 52 and 62,000, you qualify for 50% tax relief. Between 62 and 72, you qualify for 25%. And if the combined household income is above 72,000, you do not get any real estate tax relief at all.
Well, this sounds like a real win-win situation, especially if they don't have the money to make a mortgage, they don't have a mortgage payment, then they're not even going to have to pay a real estate tax bill.
And in a lot of cases, yeah, it's a lifesaver for folks.
Now, I also read about this, that if you become, like, I'm going to be, my birthday is in December, but the year that I become 65, I can get a partial relief on the real estate tax in January, even though I haven't reached 65 yet. Do you know anything about that? That was something that I read. I was kind of shocked. It came in my my Virginia Power bill, actually, about real estate taxes, and I was reading on that. So I'm going to be 65 in January, so-and-so, but because I'm going to be 65 in that year, I can get a partial credit on the tax.
I believe that's correct. Yeah, that's my understanding.
Yeah, well, it was something that I know about. Now, what about other benefits? What about other benefits with the reverse mortgage? It certainly is wonderful for seniors. What are some of the other benefits, and what other things have you done to help people that have been able to benefit from reverse mortgage?
Well, give you an example. I had a client call me just last week. She wanted to buy a second home in Florida, and she was thinking she would just do a cash-out refinance on her primary residence here in Virginia. But when I told her what the monthly payment was going to be, she couldn't afford it. And so I suggested to her to consider a reverse mortgage. They had plenty of equity in their home. They were both over the age of 62. I said, you could pull enough cash out of your house to pay cash for the house in Florida and never have a mortgage payment on another house. It works perfect for them.
They would end up owning 2 properties with no mortgage payments. It's a beautiful thing. I had a client do that last year. They used to get vacation in Florida for a week or so every year. Prices in Florida at the place where they were staying on the golf course became so low, they found a beautiful home for $160,000 that they could purchase right on the golf course. They ended up taking out a reverse mortgage on their home up here, took out the $160,000, paid cash. Now they have their vacation home. They're going to eventually sell the home here and move there, when they're ready to retire to Florida full time. 2 homes, no mortgage payments. Beautiful thing.
Another example is a lot of our clients are in need of medical care, and they can't afford it. And so the financial burden falls on their children. This is a good opportunity. Seniors don't want to move out of their houses. They want to stay there. And this is an opportunity for them to be able to tap the equity in their home. They don't have to worry about ever paying it back, and to live a better lifestyle.
Right. One of the myths is that your home must be paid in full to get a reverse mortgage. That is not true. You obviously have to have a loan-to-value ratio of somewhere in the 60% range or lower. So just for an example, if you have a $500,000 house and you have a $250,000 mortgage, you can qualify for enough funds through a reverse mortgage to pay that loan off, thus eliminating that mortgage payment. And for the vast majority of seniors that I've dealt with, by eliminating that monthly that payment, that does such an increase to their monthly cash flow that they're living much more comfortably, and that's one of the number one reasons why people use the benefit of the reverse mortgage. A couple other ones, you can use a reverse mortgage to set up a monthly annuity payment. We figure out, based on your age, the home's value, and the current interest rates, how much money you would qualify for a payment each month. And that payment is guaranteed for every month that you live in the home as your permanent residence.
Until the day you die.
So.
Well, where do I sign off? I still have a couple more years.
Yeah.
A couple more years, but it sounds like a good deal. Another thing that I was thinking, of course, we need the interest rates to be low to help the middle class right now, and certainly the seniors are not getting the same money on their investments right now. So a lot of seniors, because they're not getting those higher rates on their investments, they're kind of cash poor right now, and I think this really solves the problem of that situation, especially with children that are taking care of their parents that have to take over their finances.
That's very true, Don. We're seeing folks getting into the reverse mortgage program now that probably would have never considered it before 2008 and then the stock market crash there. So a lot of folks have lost a lot of their portfolio value, and financial planners are now really talking to us about reverse mortgages in financial planning strategies for their clients, because if we can supply the tax-free income from a reverse mortgage, by the way, any proceeds from a reverse mortgage are tax-free. Let's just, for an example, a couple was drawing $5,000 a month from their portfolio, and they qualify for $2,000 a month in a reverse mortgage payment. They could take $2,000 a month tax-free from the reverse mortgage. They'd only have to take $3,000 a month out of their investments to get the $5,000 a month that they want to have to live the lifestyle that they want to. And that is going to extend that portfolio life and maybe give it a chance to recover from the downturn. So yes.
And another very important factor in this loan, in this mortgage, is that there's no prepayment penalty. You can pay it off if you want to sell your house and move to Florida. You pay it off. You just pay what you owe. Anytime.
That's right.
But if you leave the house, if you're going into a nursing home, the loan
You
does
have to live
be
in the house at least 1 day a year.
You have to live in the house 1 day a year?
1 day a year. And it has to remain your primary residence.
Right. And if there's a couple and one of the spouses has to go full-time to a nursing facility, as long as the spouse can remain in the home, then the loan continues as well.
And here's something else that's very important. That is, after the seniors stay in the house and they pass away, the heirs have 6 months to sell the house. If they don't have the house sold in 6 months, FHA will grant 2 3-month extensions for a full year to sell the house. And as long as you provide documentation that you're trying to sell it at the market value and what have you, I think FHA would probably even grant further extensions.
So this is an FHA program. This is a government-sponsored program.
Right.
So
It's an entitlement program is what it is.
Entitlement program.
But you know, the government was looking at the demographics of the population of the United States. There's actually more 65-year-olds in our population than there are 25-year-olds. So the government decided that this, would be a very good program to keep folks in their homes for as long as possible. Otherwise, if they can't afford to stay in their home, and there's no family to take them in, then the government's going to end up picking up the tab for this, all these aging folks that we have in our population. So it's an excellent program.
I think that the government is doing something positive to help seniors here, even though it appears, that we talk about cutting Medicare and Medicaid. It appears that there are programs where they are trying to help seniors, and this seems like a program.
Well, this one for senior homeowners is hard to beat. Right. Well, Frank will tell you about how many customers how many complaints we've had over the years.
None.
No complaints?
No. Through our company and our sister company, which is a title company, we've closed over 3,500 reverse mortgages, and we've never had one customer regret it. We've actually done some HECM to HECM refis also.
HECM, what do you mean by HECM?
HECM is
home equity conversion mortgage?
That is the government acronym term. The official term is a home equity conversion mortgage, exactly. HECM.
And we do HECM to HECM refis because the plan changes. They're older, houses in some areas have appreciated, and they come back and they take it down for a second or a third time.
That sounds like
right.
Sounds like a positive thing.
Yeah. One other benefit I think is just providing financial security for seniors. Now,
absolutely.
We're blessed in this area to have a lot of high value homes with a lot of equity. A senior can take out a reverse mortgage; they won't need all the funds that are available to them. So in those cases, you keep the monies in a line of credit with the lender. And as the months and years go by, there's a growth factor attached to that line of credit. So as the senior gets older, there's more money available to them in the line of credit as a good hedge against inflation or for us any unforeseen things that might come up in their life. So it really provides financial security for seniors. If there's a need for a serious amount of cash, the line of credit, it can be one phone call away for them.
Okay, the line of credit seems like a good idea. It seems a little more complicated. Can our viewers get in touch with you about this? To discuss
absolutely.
This?
Sure.
Okay, and so you'll take their call. I know you two are very knowledgeable here. I'm sure that if anybody calls your company, they would want to talk to either one of you personally. Would they be able to get through to you?
Oh, absolutely. We hold their hands from the time of application to closing.
And even after closing, we're still there to answer questions for them. I've been in the business now, it's my 6th year. I've got clients that still call me on my old cell phone with questions or just to catch up and see how I'm doing and let me know how they're doing. But as Frank said, we've never had a complaint. Everyone's been very happy because it's a process. We go through all the scenarios and explain exactly how the process is going to work. So there's no guesswork when the senior decides to enter into the program. So they know exactly how it's going to work and how it's going to benefit them. And that's why I believe we have that 100% satisfaction ratio there.
Yeah, and you won't have any old retired actors answering the phone.
Yeah, we believe we are the local experts in reverse mortgage finance here in the Fairfax area. And one of the reasons we formed our company is because we feel that too many people are getting their information from retired TV actors or some operator in Arizona or halfway across the country who's just not really knowledgeable about our situation here.
How about some retired mortgage brokers? Anyway, okay, well, this has been very helpful. I think. How long has this program been around? Because you don't hear a lot about it.
89,
you don't hear a lot about it.
1989 is when it came about. But in the late 1990s, when the government really stepped in, and there were a few unscrupulous lenders, let's say, in the business, and kind of gave reverse mortgages a bit of a bad name. And I think so there's still a negative connotation out there in the marketplace about reverse mortgages, and I believe it was from that time in the 90s when, frankly, some lenders were taking advantage of senior homeowners.
Well, if it's an FHA program, I mean, how can you really take advantage of a homeowner? It seems like it's, not really putting them in a program or doing something else, and not, you know what I'm saying? I mean,
well, the government, FHA, backed the program in 1989. But it was not till the late 90s that they really were focusing in on the lenders and really tightening up the guidelines on the lenders.
Oh yeah, they control the cost. Total, they dictate it.
Right. Do we have time to tell the quick story about one of the worst cases of reverse mortgage?
Yeah, if you want to tell a story, we like stories.
Well, I think this is one of the, because it happened right around here. It actually happened in Baltimore. A couple took out a reverse mortgage in the early 90s. They had about a $100,000 home right close by the area of the Inner Harbor in Baltimore. Right. And, you know, the stadium was built and a lot of development started coming. Well, developers were starting to look at their neighborhood and starting to offer folks you know, a lot more money for their homes than what they thought they were worth. They held out, they held out. Finally, in 1998, a developer, they were one of the last people in this block to sell so they could develop, offered to pay them $700,000 for their little row house. They thought they had hit the jackpot. So they decided to sell the house. When it comes to pay off the reverse mortgage, the lender had written in there that they had a 100% of the home's appreciation during the time they have the reverse mortgage would go to the lender. So the headlines in the Baltimore Sun, you know, talked about this reverse mortgage company. Elderly Baltimore couple sells home for $700,000. Reverse mortgage company gets all the proceeds, and that just. Oh,
so this was before FHA tightened up on the guidelines and said, well, you can do this, but you can't put this in.
Right.
So, okay,
there are no shared appreciation stipulations in a reverse mortgage loan any longer. But that was awful.
Right.
As a matter of fact, my first boss at Wells Fargo was in the business, and she said when that article in the Baltimore Sun hit the headlines, her phone didn't ring for 6 months.
Oh yeah, I can
and that's what people remember.
I can understand why. Yeah, well, that is a major thing.
Right.
To
that was awful.
That a reverse mortgage. Well, I'm glad you shared that story with us.
Thank you. Well, yeah, it's the truth, and that's why people, I think, have that in the back of their mind. But those, you know, the FHA has cleaned up. They're only credible lenders, and they have to follow strict guidelines to be in this government-backed program.
I'd like to thank you, gentlemen, for being on our show. You've given our viewers a wealth of information. If you would like to receive a free reverse mortgage package from Ernie or Frank, please call or email them at the number in the bottom of your screen. And if you'd like to be a guest or would like to sponsor a show, or if you have any questions, please email us at donthebroker@cox.net. Thank you and God bless.